Good afternoon, everyone. Welcome to the March 26th special call meeting of the CERS Investment Committee. We have one item on our agenda this afternoon, and so we can proceed accordingly. Eric, would you do the opening statement, please?
Of course. This is a special meeting of the County Employees Retirement System Board of Trustees Investment Committee. This meeting is being broadcast via video teleconference pursuant to KRS 61826 and may be viewed by the public at the Kentucky Public Pensions Authority offices located at 1260 Louisville Road in Frankfort, Kentucky. It is also being broadcast to the public live via Facebook. If you are speaking and not appearing by video, please identify yourself before talking. If the video or audio broadcast is interrupted, we will attempt to reestablish a connection. If a connection cannot be reestablished within 30 minutes, the meeting will be adjourned and rescheduled to a later date.
Thank you, Eric. Sherry, would you take the roll call, please?
Yes, sir. Dr. Hackbart?
Here.
Mr. Cheatham?
Here.
Dr. Milkman? Mr. O'Mara?
Here.
And Ms. Pendergrass?
Here.
Thank you.
Thank you, Sherry. Sherry, I understand we have no public comments. Is that correct?
That is correct.
Okay, good. So we can proceed with our agenda for this afternoon. We basically have one item to consider this afternoon. It's an adjustment to our investment in Arctos American Football Fund. We invested in this fund back in 2023 when KPPA had committed $250 million to this investment opportunity. This past February, we added another $70 million recommendation from CERS. This recommendation is basically to adjust our commitment to realize a saving of $79,000 per year in management fees. This, of course, is in our real return component of our portfolio structure. So I would like to turn it over to Steve to present this recommendation to the staff, and thank you for your presentation.
Thank you, Dr. Hackbart, and appreciate everyone's time and flexibility today, especially on such short notice. As Dr. Hackbart mentioned, an opportunity to present a recommendation for CRS to make an additional commitment to the Arctos American Football Fund. And this additional commitment of at least $5 million would result in additional fee concessions for all of the CRS assets invested on the Arctos platform. So as Dr. Hackbart mentioned, back in 2023, KPPA committed $250 million, including co-investment to the Arctos Sports Funds 2. And then in February, CRS committed $70 million to the Arctos American Football Fund. And again, this sits in our real return portfolio. And as we've often discussed, this landscape is very broad, includes both public and private assets. And staff focuses on sourcing and reviewing differentiated real return investment opportunities that we consider as having compelling economics, favorable standalone risk-adjusted returns, importantly, low correlations to what the existing real return investments, as well as the broader overall portfolio, which is dominated by growth assets, and also provides inflation sensitivity and meaningful diversification with the benefit of significant contractual cash flows. As we stated in February, we believe that this investment meets all of those criteria and provides exposure to the unique asset class that is the NFL. While additionally providing investors embedded liquidity options that are unique for the private asset class. So with that, I'll turn it over to Anthony.
Yes, thank you. As we discussed, it's an interesting opportunity. They are still active in deploying. The plans are still to deploy across perhaps 3 to 4 teams over the next 18 months or so. You guys probably remember the league approved institutional investment in teams last year, and the first deals that the league approved and completed were done by Arctos with the Buffalo Bills and Aries with the Dolphins. So they are still live with several deals at the moment, and we just caught up with them earlier, and we still find it to be a very attractive opportunity. The chance to add an incremental amount to get fee savings is I think makes a lot of sense. It's not a huge addition to the CERS portfolio. I think it's a few basis points, as you can see from the memo. So I think exposure to this is very attractive for the plans. And like we said, with the rest of the 70 million is less correlated with the other parts of the portfolio. It has often a lot of ballast since there's significant profitability that is visible given the media contracts before any games are even played or before any tickets or anything are sold. And the folks that Arctos works with are the folks who want to build and grow their businesses. And so they bring more than just capital to that. Obviously, if you want, there's plenty of money around. And so some of the other deals that are likely to happen and have happened may be at different valuations and with different terms. But Arctos is keenly focused on doing attractive deals. Right now, there's not as much structure like they usually have in their deals, given their backgrounds and secondaries and ability to structure transactions. But they are working on that and continue to dialogue directly with the leagues to work on implementing different investor-friendly items to the deals. So we still feel very confident with that and are happy to take any other questions if people have some.
Yeah.
So just to be clear, Anthony,
Sure.
so in effect, we invested committed another 5 million. We would be at a different level, and therefore the fee structure changes. Is that essentially what's happening here?
That's correct. Yes, there's a lot of funds that we work with in private markets. They have different thresholds for fee breaks, and so at the $75 million level, we would reach another level. And so obviously, the 70 million was originally with envisioned for to split among all of our plans, and other groups have chosen not to. So we still think it's obviously a very good opportunity, and that's what we're recommending for the C plan.
Thank you.
Sherry, if you could turn to page 5, please. Thank you. So just to provide an update on where we are from a real return allocation perspective, this is a look at the CRS pension portfolio as a representative of all 4 of the portfolios. They're all very consistent from an exposure standpoint. So currently the real return, and this is, I believe, as of last week, the end of last week, you can see that real return was 5.1%, target is 7%. And then the breakdown of what the current real return allocation is, and this is called and committed capital. So this is actual investments. And if we go forward one page, Sherry, we take a look at on a pro forma basis, if all of the committed capital to date was called, what would the portfolio look like? In this case, you can see that the real return allocation moves up to 7.6, and the breakdown of that allocation is there on the right. The additional incremental, obviously a number of these investments are cash flowing. I would also highlight that 8% of the overall real return allocation on a pro forma on a fully called basis is the Prisma cash that's tied up in litigation that we hope to get back to the portfolios in the relatively near term. We'll see. So the incremental add, as Anthony mentioned, it's 5 million for total exposure, and that's measured across Fund 2, not the co-invest, but directly in Fund 2, as well as what's been committed to the AAFF. 5 additional million takes you to that fee break. There's capacity for 30 million allocation up to, and that's what the recommendation is. So we look at it. If we were to add just the additional 5, that's about 3 basis points to the total at the total portfolio level. That would take the Arctos Sports Fund, the AAFF, to 5.1% of the real return allocation. If we were to do the full 30 million, that's about 15 basis points at the portfolio level of real return, and that would take the AAFF up to about 6.7% of the real return allocation.
That's helpful. Thank you. Yeah. Any
Happy
questions?
to answer any questions? Yeah.
Just a few. Did we get our ownership question answered, Steve?
We believe we still have a couple of discussions to have with BNY, but we think as of now, we believe that we will be able to pay for the investments in the CRS name for the pension side, as we've discussed.
Okay.
This would be the first one of that type, right? Is that Steve?
That's correct. That would be correct, yes.
Remind me, the original 250 million that was invested, how much of that was C and how much of that was K?
It's a 70-30 split, so that's what we've generally done. Both for coincidentally, it's that way for pension and insurance split, and then also for K and C.
But
And
the
of that original commitment, half was to Fund 2 and half was to co-investment.
Oh yeah, sorry, I thought you meant K and C. Yeah.
So what I hear you saying is 175 of the original 250 was C money, correct?
That's correct.
And you're recommending we go from 70 to 100 on this particular fund. So that would take us up to 275 million total between all of Arcos's funds. Is that correct?
That's correct.
Between the funds and co-invest, yes.
Spread across to pension, to health insurance.
Correct.
Thank you.
Okay. The where does, can you give me an idea of where the breakpoints come into play?
The breakpoint that we're reaching, it would be 200 million. So we have the 250 million commitment from before, but the 125, half of that is co-investment, so that already has no fees. And so we're talking about paying assets, so that's 125 in Fund 2 that was fully paying, and then now the additional 70 that you approved gets us to 195, and then another 5 would be 200. So that's the break.
That answers my question.
Mhm.
Yeah. From what I've seen through my email feeds over the last few weeks, it seems to be sports seems to be a hot investment. I noticed where was Boston Celtics, one of their managing partners sold out for a valuation of 6.1 billion. Did you all see that?
We did. That is that's a control sale in this case, so not just a stake sale like the NFL ones are. But yes, that was definitely a big headline.
Yeah, I saw the original investment was 233 million back in early
Pretty good return.
Is that what we're expecting here?
I don't expect that our realizations will be quite that substantial, but again, we think it's a compelling and attractive. And as Anthony mentioned, we were on a call today with Arctos discussing some opportunities, and I think the changing landscape as well as the league rules changing is going to really open up that investment opportunity set.
The two things I like best about this investment is, it doesn't exactly have an end date, but it has an exit strategy, number one. The other thing that I like, given the current environment we find ourselves in, is, they've got, locked in income going forward over the next several years. So I would anticipate that, puts the risk level at a minimum for this type of investment. So
yeah, we agree. That's why we're focused on the leagues. Probably some of the headlines you've seen also are some of the emerging leagues, and we view those more as growth investments with a different risk profile. But the leagues like the NBA, NFL they're collectively bargained, very established, long-standing media contracts. Those have good visibility, and those are more what we're interested in exposure to. And the NFL is unique among all those. So.
So as I understand it, the question we've basically got before us is whether we want to commit 5 million more or up to 30 million more. Is that
Correct.
what we're looking at?
Yes.
Correct.
Okay.
Would we have a separate action if we were to go above 5 million, or would that be included in this motion if we have a motion approved? for this recommendation?
The staff has recommended an additional investment of up to 30 million. I think they've only indicated that the 5 million gets us to a fee break, but they're recommending an investment of up to 30.
Right.
Yeah.
That's correct.
Right. Okay.
You know,
So-
5 million is a no-brainer. It's just a question of how much more we want.
So it's a minimum of 5 up to 30 is essentially, the way to phrase it. Right. Okay.
Well, the question that I have is that we just talked about this company a month ago. What has changed about Arctos that requires another committee meeting and board meeting? I mean, to me, this seems kind of a given. Normally, this would be the type of investment that had been approved by investment chair and board chair without having to convene two meetings. That I don't know how much it costs to do a Zoom meeting or two, but I'm not sure. Is there something significantly different about Arctos since February?
No, but our investment policy statement has changed, so
Right.
the authority has changed so that it
Gotcha.
requires investment committee and board approval.
Miss Betty, I think, the short answer to your question is the original recommendations were to us and to K, and K opted out. So it's left up to us just whether we want to pick up that other 5 million for a break point, or whether we want to take the opportunity to, go to full 30.
Well, I get that, but it's still a no-brainer when you look at the percentage of assets. I just think it's the kind of decision that the investment chair and the board chair could make without a full-blown meeting or two.
Now, I
I think we just decided to go this way, Betty. So, I mean, just to be.
I mean, I understand that we changed the IPS so that we have to go through this additional cost to make a no-brainer of an investment, but
Now, I think 5 million certainly would be a no-brainer, but if we take the full 30, I think that's, takes it to a different level. But I take your point. We may need to amend something to deal with small issues, but I think the larger issues, still need to be vetted by everybody.
it's still less than 0.1% of our assets. So
We realize that, but the general public may not.
Mr. O'Mara has his hand raised.
Yes, I just, to me, this is a learning point that both C and K investment committees are making independent decisions for what they think is best for their funds. And I think that's healthy for the membership of those two funds. And I was interested in the answer of how it's going to be recorded in BNY Mellon's custodial accounts. So I think there's some good learning points here. And I guess those were my comments, but we'll see when we're ready to make a motion. Thank you.
I guess maybe along that line, Bill, this will be recorded differently than the original 250. Is that correct?
Correct. So the original 250 is split half and half into Fund 2 and co-invest. So those are distinct line items and accounting units and BNY's custodial system. Then the most recent commitment, which was the 70 million, is going to the AAFF, which will be a unique line item in the BNY custodial system. If we were to approve an additional commitment, that would go into the same line item. And again, C is the only investor. We're working on having C actually execute the contract. That the investments would be held in C's name and noted as such in BNY's custodial system.
will that apply
On
to
the
the
pension
70 million as well as the up to 30?
Is everybody ready to consider this recommendation?
Would the ownership?
I'll make the motion that we accept
Yes.
Investment Office's recommendation, 30 million at this point. There's some discussion, but just to make the motion, I'll put it out there.
Thank you.
second that.
Does someone have a second, please?
I'll second.
Second.
Motion's been made and second. Is there further discussion?
So the 70 million plus
If not,
we add
we can
now.
proceed to vote. All in favor of accepting this recommendation from staff to commit an additional up to $30 million to this investment opportunity, please indicate by saying aye.
Aye.
Opposed? Motion carries. Thank you, Steve and Anthony. And
Thank
Thank you very much.
guys.
I believe that basically concludes our agenda and our shortened meeting this afternoon. So thank you all for being here. And
Mr. Chair,
yes,
before you conclude the meeting, we had a mute issue here. Ms. Pendergrass had a question that.
oh, I'm sorry.
It doesn't affect my vote, and I voted in favor, even though I was muted. I'm starting to take that personal. The 70 million plus the up to 30 million, will both of those items be in CERS ownership in BNY, or just the 30?
So all of it will be,
Right.
all of it will be, with the caveat that the pension allocation of that 100 million will be in C's name.
Okay.
We can talk about the other, but insurance, that's not right now. That's
Right.
not an option.
Yeah, I get that. We have
Okay.
we have a different kind of issue on the insurance side, but
Yes.
that's good. I'm excited that we finally get CERS ownership on an investment asset. I've been trying to get that done for 4 years, so I can leave the board with a smile on my face.
We're happy to get it over
I
the line
know it
for
can
you.
be done.
Yep, it's gonna
All
happen.
right. Anybody else, any final comments, thoughts? If not, I think the meeting is adjourned, and I think we're going to have a full CERS board meeting at 2:30. Is that correct?
That is correct.
Okay, so we'll call this meeting adjourned. Thank you all.
Thank you.
Thank you.